So it's time to do 55 minutes of business right here on Business Incorporated. I'm Ini John McQuarrie. Here's what we have prepared for you on this episode of the program. Kenya is yet to revive that tax measure that caused a whole lot of protest in the country, part of the finance bill. And in spite of efforts, unemployment rate in South Africa is growing, is now at a 2-year high. And we'll give you updates on transactions going on around the bank recap here in Nigeria. Good afternoon, welcome to the program. It's going to be 55 minutes of going around the world of business. We'll start from the global space. Oil prices edged low on Tuesday, breaking a 5-day streak of gains as markets refocused on concerns about demand after OPEC on Monday cut its demand growth in 2024 because of softer expectations in China. We look at the numbers right there, and they're looking so red. Almost 1% for both benchmarks. For Brent, it's down 0.95% at $81.52, while for WTI, $79.33 a barrel. That's also dropped 0.91%. Of course, we're counting down to inflation numbers from the United States expected tomorrow. That also is going to give one way or the other, give an area direction to oil prices. That'll be tomorrow, Wednesday. Now we go to metals now and tell you that gold prices eased on Tuesday as profit taking kicked in after bullion hit a more than 1 week high, while market players awaited key U.S. inflation data. Now let's look at the numbers. Spot gold we see dropped 0.4%, $2,462.19 per ounce. U.S. gold futures also dropped 0.16%, a huge drop right there. I wonder what will happen this time tomorrow or a bit after this time when inflation numbers have come up. We know that gold mostly is a hedge for inflation. $2,502.50. That's what we have there. We look at other metals, and we see spot silver also in the red, just like yesterday. They're all in the red. Spot silver down 0.12%, $27.67 per ounce. Platinum is also down 0.3% at $933.96. And palladium is also down $914.25 for an ounce. Now we come to Nigeria. Earlier today, we did talk about the circular economy in Lagos State. To be specific, at this time, we had a special advisor for the Lagos State governor on that. And they're saying that they are putting in businesses to take care and incentivize recycling habits in the state. We'll just give you a clip of part of what she said earlier today.
If you know that Loma already had started with this sensitization and integration system, driving households, even through schools, secondary schools and primary schools, to say that there are beans that are labeled in color codes, and these beans have different purposes. They have different components that you should harvest them in. So there's a place for paper, there's a place for plastic, there's a place for organic waste, right? So at home, at the household level, at source, people are encouraged to start to sort their items, their waste, especially those that they know that they can hand over either to the PSP. Those are the people who come with the trucks, those that are come, even the organic ones right now. We're beginning to find a way to create some waste valorization model so that people can exchange their organic waste. So we're going into schools, we're going into communities, because we also understand that children are very, very great influencers. If they get to hear from their teacher that they can earn money, they can earn, some form of reward for the plastics that they bring, they can go back home and spread the word to their parents as well.
So now we're heading to Kaduna State, where the state governor there is making good his promise to show commitment to food security, boosting food supply in the country, and is doing this by sharing free fertilizer to farmers. In northwest Nigeria is indeed an agrarian state with vast arable land, making it suitable for farming and other agricultural activities. With the peak of the raining season in place, the state government has procured a total of 500 trucks of fertilizer amounting to 15,000 metric tons for free distribution to smallholder farmers across the state, all geared towards empowering them to achieve food security and economic growth. Murtala Mohammed Square in Kaduna State Capital is filled to capacity with farmers drawn from across the 23 local government areas, as well as top government officials and senior citizens for the official flag-off of the free fertilizer distribution.
The flag-off of this fertilizer distribution is a reflection of the governor's commitment to support those who produce the bulk of the food we eat. These are the smallholder farmers, the real farmers. It is a demonstration of his commitment to achieving food security and addressing hunger.
In his remarks, Governor Uba Sani says the distribution of 15 metric tons of fertilizer to smallholder farmers is a clear demonstration of his administration's commitment to reposition the agricultural sector and make farming a profitable venture.
Today marks a significant milestone in our journey toward the revitalization of the agricultural sector and ensuring food security in Kaduna State. This initiative clearly demonstrates our steadfast commitment to empowering our farmers and re-energizing our agricultural sector. Agriculture is not only the backbone of our state economy, but also a vital contributor to our overall growth and development.
Governor Sani also highlights some of his administration's interventions in addressing significant setbacks in the agricultural sector to avert post-harvest losses, and therefore urges the farmers to make good use of the fertilizer for better outcome.
Our Talapin Noma initiative, a part of our broader palliative program, targeted 42,000 smallholder farmers and cooperatives across the 23 local governments. We have distributed quality seeds, agrochemicals, fertilizers, power tillers, vegetable grinders, knapsack sprayers with personal protective equipment. This support aims to help farmers recover and enhance their productivity.
Some of the dignitaries and beneficiaries at the event described this free fertilizer distribution as unprecedented in the history of the state.
Agriculture all over the world is heavily subsidized in order not to keep the farmers in business, but to ensure food security. As the saying goes, the journey of 1,000 miles begins with one step. So what we're here present to launch is a major first step forward.
Provision of 500 trucks of fertilizer free to 120,000 farmers is not a small job. We thank you for that, and we pray that the good Lord will continue to bless you.
Defying the rains, Governor Sani hands over the bags of fertilizer to the beneficiaries, accompanied by the Emir of Zazzau and other dignitaries. Since inception, the administration of Governor Uba Sani has made remarkable progress in enhancing food security through various agricultural initiatives, and the distribution of 15,000 metric tons of free fertilizer to farmers therefore underscores the governor's commitment towards revitalizing the sector, which accounts for 42.81% of Kaduna State GDP. Yeah, that's Kaduna State right there. Well, just before we move on with the program, this news just coming in from the Central Bank of Nigeria says that the Central Bank of Nigeria is reintroducing the publication of several key economic reports. And this, they say, is to reaffirm their commitment to fostering transparency and accountability. So now we would be expecting to get reports such as the Purchasing Managers Index, that's the PMI, which every other country has been sharing, business expectation survey, inflation expectation reports, not just inflation, which comes from the NBS, and other macroeconomic indicators. This, they say, is to provide stakeholders with timely, accurate insight into the country's economic performance. I must say that the PMI is really what we're looking forward to, because before now we've had to be waiting on Stanbic PMI every month. So having it from Central Bank of Nigeria at least should be more objective and on that. But I guess it's a good time to also bring in our guest here. He's an economist and the Chief Executive Officer of Timeline Consult Limited. Mr. Shuaib Idris joins us in the studio. Mr. Idris, good afternoon and thank you for your time.
Good afternoon and thank you for having me.
Yeah, I just saw this and I mean, I'm kind of excited because we see PMI from other countries, the Western world, even countries like South Africa around here. But in Nigeria, we haven't been getting PMI numbers as well as expectations from the central bank. So we've had to depend mostly on a bank like Stanbic. So I guess this should give it a more holistic look when we get PMI for the country.
Well, I think is a good news, is excellent development. The Central Bank of Nigeria and indeed Central Bank of any country is established purposely for a number of reasons. Apart from being banker to the government of this nation, it is supposed to be a repository of data and knowledge. There is supposed to be a research department properly and adequately, staffed and funded, wherein they gather data, analyze, research, and bring out, periodical reports and statistics. The Central Bank of Nigeria over the years have had a very strong and relevant research department that a number of times, their statistics is being used by the World Bank, the IMF, the ECA, the Economic Commission of Africa, and every other, university or other, research institute. And I am sure that maybe in the last 2, 3, 4 years, the central bank, over that years has derailed, and the research department was probably either not adequately funded or not adequately manned. So those data that we used to get and we were taking it for granted, we were getting them, the central bank wasn't in a position, or that department wasn't in a position to produce this data. I believe maybe Yemi Cardoso has been able to staff the department adequately and fund it, and therefore he's coming out with this. And I think it's a step in the right direction, like I did say, so we can now have a bit of a multiplicity of data to begin to see which one is the best. If you have something, say from financial derivatives, another data from Stanbic IBTC, another data from say MBS, the Bureau of Statistics, and then another data from Central Bank of Nigeria, then you can compare and contrast and see to what extent are these data relevant. And I think it's a step in the right direction. I will say kudos to Yemi Cardoso and his team.
Yeah, we'll certainly look forward to the release of those numbers. Now we'll have eyes on that. But the other issue that, originally we were supposed to talk about, the issue of regulation. We know that the CPPE recently raised concerns about the burden of regulation on investors and companies. From your perspective, because we know now the government needs money, as always, but there's a responsibility of balancing the revenue and regulation, which mostly comes through taxation and all of that. Where do you assess, where do you see us when it comes to the ease of doing business, balancing the issue of revenue and regulation from the government agencies?
I think the starting point should be, what should Nigerian government be doing in trying to address the issue of the revenue deficit? To my mind, there are about 3 or 4 areas the government should, spend a little more time. Number 1 is blocking the leakages. Mr. President has consistently been talking about blocking the leakages. Our dear brother and my former boss in the banking industry, the finance minister, Olawale Edun, alluded to the fact that they have blocked a number of so-called leakages. But it's the system feeling the action by the government? Not so much. Number two, area of wastages. We've been continuously advocating for a reduction in the cost of doing business and cost of governance in Nigeria. Again, Mr. President has come out a number of times to say he intends to implement to the latter the Steve Orosanya report that recommended a merger of a number of federal agencies, ministries, and parastatals. But what are we saying? Instead of reduction, we are seeing even expansion. You ask yourself, do we really need a Niger Delta Development Commission? Do we really need a Northeast Development Commission? Do we really need a Northwestern Development Commission? Isn't that a multiplicity and duplication of the functions of, say, Ministry of Works or this ministry or that ministry? I think that Mr. President need to not just talk the talk, but walk the talk. The third aspect is the issue of, instead of increasing, the rate of taxation, we should try to broaden the tax bracket. Most Nigerians don't pay taxes. Most companies evade and avoid taxes. So we need to make sure that we block those loopholes. Now, once you do that, then the nation can have a larger cake that can then be shared, and then the dividends of democracy can then be given to the people. Now let's fast forward to the area of ease of doing business. What exactly is the phrase ease of doing business? My own little understanding of it is creating an environment that is relatively simple for any entrepreneur, whether local or international, to come in and start business so that he or she can create employment, or render goods and services, or create goods and services that can be sold either locally or internationally, so that the much needed foreign exchange can be earned. Now, when and where an environment or an ecosystem does not make it relatively easy for entry and exit into the environment, particularly in areas of starting business, when you have multiplicity of regulations, or you have institutions that are so amorphous, so complex, nobody will come. We have an adage in the investment parlance: capital is a citizen of any country. It goes where it is most welcome and where it can germinate, grow, and give returns to the owners.
Idris, I mean, we have PEBEC, we have a lot of ease of doing business policies everywhere. Talking about tax, we have the Taiwo Udele, the reforms proposed. We're waiting for implementation. I think a couple of the executive orders have been implemented. That's where we have the imports and the small hold for small businesses also. So would you say we're on the path to this ease of doing business in reality now?
You see, Madam, Nigeria has never lacked quality and good policies. What we always lack, and we are still lacking, are fundamentally two things. Number one, the courage to implement these policies, and the courage and wisdom to pick the right people to put in the organization or institution to implement such policies. Let me take us down the memory lane. We've always had a Nigerian Investment Promotion Commission. The commission was established some years even before the current democratic dispensation. We're talking of 30, 40 years ago of establishing an IPC. And under President Olusegun Obasanjo's term, 1999 to 2007, we had what we call a one-stop shop, wherein a foreign investor or even a local investor can go to NIPC and get virtually all the regulatory requirements, to start a business. But how efficient, how functional, in fact, not even efficient, how functional is the one-stop shop? to the best of my knowledge, it is just there. Mostly when they started, they were quite good. I can remember when Engineer Mustafa Bello was there, when one or two other people were there, Alakija, Mrs. Alakija that used to be there, Abraham Adesanya's, late Abraham Adesanya's daughter. They did excellently well, and the one-stop shop was functional. Chinese and Japanese and other nationals were coming in. But down the line, we have lost the steam. So, yes, we have had these policies. Yes, we have had these programs and this intention. But Nigeria, and indeed Nigerians and Nigerian government, lacks the courage to talk the talk and walk the talk. To tell you the truth, when Jumoke Oduole was put into, by President Buhari to handle this ease of doing business, we have had conversation, and I think even in this studio on that subject matter. What they were doing was basically ticking the box. Can you imagine that out of 190 countries that the World Bank assessed on ease of doing business index, do you know where we are? 131st. And yet, we are it's supposed to be the investment destination of the world, not just of Africa, yet we are number 131. I think we Mr. President, and I think the Minister of Industry, Trade and Investment should look at themselves and say, where am I today as a country? Where should I be? Should I be among the first 50? If I'm 131, what do I need to do to gyrate to that level where I want to be? And then let there be a dashboard that is it weekly, is it monthly, is it quarterly, that you should look at and then beat your chest and say, yes, what I set out to do, I'm achieving or I'm not achieving. And if I'm not achieving, why am I not achieving? I think if we don't do that, we will continue to just be a talking shop.
So it looks like a lot of questioning, but I think one thing you've said here, saying that leaders seem to lack the courage to walk the talk, I think that kind of stands out because, as you've noted, we have policies everywhere. We've seen it written down, we've heard it spoken, but I guess it's just doing it that's left. A lot of introspective questions that you're posing to the leaders there. Well, thank you so much for your time. We do appreciate your time.
Thank you for having me.
All right. So one other issue that is on the front burner now is that announcement of, intervention, would I say, of the central bank between Unity Bank and Providus Bank. And a lot of questions are being asked. Why was Heritage Bank not saved? Why now do we have the 700 billion intervention from the central bank and this merger between Unity Bank and Providus Bank? Let's talk about this. Perhaps Professor Kenife has some background story for us to help us understand the objectivity behind this development. Economist joins us virtually from Enugu. Professor Kenife, thank you so much. Good afternoon.
Oh, thank you for having me.
So I don't know if you could help us answer some of these questions, because people are asking why Heritage Bank wasn't saved and now it seems Unity Bank is getting saved.
Oh, I think there are two different situations, to be honest, and they're not actually comparing like to like. The issue of Heritage Bank is, first of all, central bank has two core mandates. One is the price stability, and of course, is an overarching mandate that it sets all those prices, and there are things that are prices, inflation is price, NPR rate is price, and all of those price mechanisms are things that central bank will have to act on and attenuate as the situation demands. Now, the second one is financial system stability. The central bank is a regulatory agency, it regulates those banks, and one of the instruments that it uses is prudential guidelines. And those prudential guidelines are based on risk-based banking supervision. And it tends to do that with NDIC because both of them are sharing the risks involved in those. So they go around, there are so many things in their list. They have things like non-performing loans, they have capital adequacy ratios, they also have things like cost to income ratios, so many ratios that they look through to enable them gauge the health of the financial institution, and they actually advise them. In some cases, they intervene, and it depends. So the cases are different. The case of Heritage Bank has been one of persistent financial performance decline over the years. And the central bank didn't sit back and watch them fail. No, it actively interacted with them to the extent that in some cases it had to approve the removal of some of the staff that they felt were partly responsible for the collapse in the system. They also had to grant financial accommodation to the bank at some stage. And even notwithstanding those, it even had brought them back into the clearinghouse October last year. But that all of these measures didn't quite save the day. So I think central bank's hands got tied to the point that they just had to let it go. But before central bank makes this decision, it has to look at in great detail the issue. What can this potential impact be on the financial system stability? Now, that is something that it looks into very deeply, because you don't want to take an action that will disrupt the entire financial system or cause such a upheaval or even contagion effects and all kinds of damaging the confidence of the investors and all of that. So it has to look very carefully and weigh those very, very carefully before it takes that decision. And in the case of this, the case of Heritage Bank, I think the patience of the central bank was exhausted. And in fact, let's even look at one of them, capital adequacy ratio. International banks have a capital adequacy ratio of 15%. The national banks have 10%. And in the case of the bank, to even satisfy they've been on negative territory on the capital adequacy ratio, which ought to be about 10%. They've been on negative territory. And to actually bring them to reach sustainable levels would actually require an injection of 1.33 trillion naira. That is staggering. So you can see the depth of that challenge. So I think central bank got pushed to the end, that it decided that it just couldn't salvage it. And not that major options came forward. There was no options like, oh, can we merge with another bank? Can we have a takeover? Those ones, the merge didn't appear on the horizon, as far as I know. But when you come to the case of Unity Bank, it's a slightly different scenario. They have had their challenges. They have, but you have a case where a Unity Bank that had 3 million customers and also have 230 branches was offering the opportunity to merge with another bank, which is a digital bank in a very smaller number, 300,000 and very few branches, 14, but it's very heavy on digital technology. So the bank looked at the combination, what was being offered, and felt more confident that if they decided to intervene, it will not be an intervention in vain, that there are clear prospects that they could recoup. And even in the terms offered to them, they are very confident that they would be able to recover the money that they are putting there. But again, the bank had to come to those parameters of financial system stability to be able to weigh this very carefully. So it had to look at how systemic is the challenge that Unity Bank poses. If you look at Unity Bank, it's a national bank, by the way, but it is a stronger regional bank in the sense that most of the states in the north is their first bank. So it's heavily exposed to the northern states. And also, they are very heavy on financial inclusion in the sense that if you have a huge section of our community that are engaged by that bank in the area of financial inclusion, and you have so many exposures, so many financial institutions are going to crash, and there will be all kinds of things. So they have to weigh that very carefully and then find out that it is actually, rather than save us that embarrassment, they have to sustain this. But don't forget that this is not a decision of this bank this year. It has already been decided in the previous administration, and they were recommended and accepted 800 billion package. But it is in this administration, they have to reconsider all of that and then decided to take it down to about 700 billion and then consider all of these issues that I'm now raising about the systemic nature of this particular intervention. So they have to look at that very, very carefully.
So I think the other question would be, we know that Unity Bank is listed on the NGX. Providus Bank is not. We know they are aiming to have a new name, a new identity. I wonder where that leaves the depositors as well as investors in Unity Bank, especially on the exchange.
Well, I'm not sure about that, but I have to say that I can only talk about what I have on my business. I think that you can't actually compare both of them, because the central bank is fixated on financial performance and the potential damage that could be done to financial instability if they were not to respond positively to the option offered by the Unity Bank, Providus Bank option. And I think that is reasonable.
All right, Professor Ike, thank you so much. Of course, we'll be watching the space to see what they come up with. But of course, the security of depositors, I think NDIC, as you said, is working with them. So depositors and investors should be safe going by, what we've been told so far. Thank you so much for sharing your time.
Thank you very much. I think the majority are being settled as we speak by the NDIC. And I don't think there are...
That's for Heritage Bank.
No, I'm saying that the Heritage Bank, the depositors have been settled. About a huge majority of the depositors have actually been attended to. They have been disbursed actually by the NDIC. And we are very hopeful that there will not be any failure in that respect.
Yes, thank you. Thank you so much, Professor Kenife. Yes, the NDIC did say that about 82%, I think, of deposits have been. Well, thank you so much for your time and do enjoy yourself in Enugu.
Thank you very much.
All right, let's take a break now and delve more into the markets with Aniti Edit. That's after the break. Stay with us. Welcome back. Still watching Business Incorporated on Channels Television. We'll head straight to the markets now with Aniti Edit. Aniti, good afternoon.
Good afternoon, Nini. Well, back to the basics. That's what I'll call the markets. It's back to the red territory. So we could make we couldn't sustain that gain that we had on Friday. But Monday's trading session wasn't red. But let's take a look at intraday numbers for the market. Starting off with Africa, where we see we saw about a 0.72% decline at the close of Monday's trading session. But at intraday, the market has been able to win back some of the losses because the market had closed at about just slightly below the 98,000 points. But at intraday, it has been able to, although these numbers are still changing, like we always say, 0.37% at intraday for the market. Yesterday, we saw many of the key banking counters, 3 out of the figures pulling the market in the red, as well as the likes of Boa Cement and Lafarge, which also affected the industrial goods counter. But take a look at the markets here. We see some bargain hunting, which has been able to put the market back in the green. But for the other side of the market, South Africa's GSE 0.11% down at intraday. 80,000 is still the number for that market. On the other side of the market, let's take a look at Egyptian Stock Exchange, 1.05% at intraday, 29,393.43. While for Kenya's Stock Exchange, for Monday's the close of Monday's trading session, they're slightly behind us. 0.11% is what it ended Monday's trading session. Now, from the equities market, we will be talking about the equities market as well as the fixed income market. But let's delve more into the equities market, and this time talking about bank offers, where we see so far we've seen about 5 banks making their public offers either hybrid or just one offer, or hybrid meaning rights issue, and then the other being a public offer. Now we've seen the likes of Fidelity Bank, Zenith, GTCO, FCMB, and Access. 2 of them were closed yesterday, which is Fidelity Bank as well as GTCO. They were closed for the 12th. But now we still have some other banks going, which some of them will be ending in a couple of weeks from now and in September. Now let's get a closer perspective on this bank offers, and to give us more details about that, let's bring in analyst for today, Nabila Mohammed, financial market analyst with Chapel Hill Denham. Thank you for joining us, Nabila.
Hi, good afternoon. Thank you for having me, Anita.
Oh. Okay, so now, so it's a return to the public offers market, and especially when it comes to the banks, they do it better, public offers. But so far, how can we compare what we saw in the last 20 years when that banking consolidation prompted the banks to approach the capital market, or the stock exchange to be precise? What can you tell us about this latest public offers from the banks?
So really, we cannot compare the 2005 consolidation exercise or capitalization exercise to this time, because the capital market has evolved. It is more developed. We have the infusion of the use of digital technology in terms of reaching, as far more people or far more investors that we can have in this particular public offering or rights issue, depending on whatever the bank is trying to do in terms of capital raising. So the scenarios are entirely different. The capital market has evolved so much. And as I mentioned earlier, we have the use of IT now in terms of investors just subscribing at the comfort of their homes, not having to do the traditional method of paper and pen like we previously had in the last exercise. So it is more inclusive, it is more engaging, it is more, investors are more involved this time around relative to what the last exercise was.
Okay, so now let's make a side switch from equities into the fixed income market. The correlation between the fixed income market and the equities market was yesterday we saw the debt management office opening this time the August savings bond auction. Now, what are your expectations? Are investors really whetting their appetite for fixed income instruments, particularly bonds and treasury bills?
So you'd agree with me that this year we have seen that the savings bond rates have reached highest levels, and it's unsurprising given the current realities on ground with regards to interest rates across the fixed income market. So we are seeing that happen, and it's not surprising that yesterday's savings bond auction, the 2-year and 3-year, at record high at 18%. For the 3-year as well. So we are not surprised by that. We would expect that given the realities in terms of interest rates in the market. And of course, it is for retail investors, that's the target market for the savings bond, and they can invest as little as 5,000 naira and enjoy quarterly coupon payments based on whichever one they invest in, the 2-year or the 3-year. So it is really attractive given the rates that we are seeing it being offered at. That's both the 2-year and the 3-year for the savings bond as it opened yesterday.
Nabila, I think we'll have to leave it there because of time constraints, but we thank you so much for your analysis on the show, and we hope to see you next time. That was Nabila Mohammed, financial market analyst with Chapel Hill Denham. Give us details about the market. I think time is not on our side, but in a nutshell, US market, Asia market, we're in the green.
All right, thank you so much, Anita.
Pleasure.
All right, now let's go to the UK now. Thankfully, we do have Juliana back with us. Juliana, we're happy to have you back, but I don't know, I think you come with unemployment data at this time.
Good afternoon, Inni. I've been watching you whilst I've been away. And yes, we have got some UK labour market data, which was released this morning by the Office for National Statistics. A bit of a mixed bag. Some economic analysts in the UK want to see tomorrow's inflation data, all-important inflation data, to try and put a good picture in place of what the Bank of England are likely to do when the Monetary Policy Committee meet. And that is because, surprise, surprise, wage growth, which has been growing steadily over the past couple of months, has slipped. It's slipped back for the first time in 2 years. It's actually dropped to about 5.4%. And one of the reasons why the Bank of England was so sluggish in reducing interest rates, which they finally did to 5% at the last meeting, was because of wage growth and the fact that more people had money in their back pocket, fears that inflation would be pushed up. But alas, it's dropped back. Not great for employees still struggling with the cost of living. But it does appear that this has got lots to do with the former Chancellor of the Exchequer, Jeremy Hunt, and the former Prime Minister, Rishi Sunak, who this time last year were in a really fierce battle with NHS staff who were striking on successive periods. Now, they received a pretty large one-off wage slump, and that does appear to have pushed down this wage growth. And also as well, UK unemployment inactivity is pushed down. So UK unemployment for the second quarter is down to 4.2%. And I said it was a mixed bag at the beginning of my statement, because economic inactivity, which is basically looking at those who should be working, has risen. So 1 in 4 UK people who should be at work, so between the ages of 18 and 65, are currently not at work. So it's going to be pretty interesting for Rachel Reeves, the new Chancellor, and Sir Keir Starmer to try and tackle the economy when Parliament sits back, I believe, in 3 weeks. It's been a really difficult time for him, and we are starting to see that some of the economic data coming out is not looking so good.
Yeah, well, not looking so good, Gillian. I know that protest talk was also supposed to be on, but let's just look at the investors this time because of time. What's going on in the markets?
Okay, let's skip the protest talk and talk about the numbers. The all shares down. It's down 0.21%. FTSE 100 down by the same, and the FTSE 250 also down by the same figure, 0.21%. In the currencies market, the British pound is trading up against US dollar by 0.14%, up against the euro by 0.26%, and up against the Japanese yen by 0.54%.
Thank you, Juliana. It's good to have you back.
Thanks, Inni.
All right, let's just jump over to Berlin, where 2 years ago, Germany introduced a basic income program for its citizens, and it's helped many, but it angers even more people. And one government party is suggesting changes on that. Lars Holter has the details. Hi, Lars. What's going on with this program?
Thanks for having me, Inni. Well, first of all, I guess I need to explain what we're dealing with here, and especially the name of the program. In German, it's called Bürgergeld. That literally translates into citizens' money, and there's a reason why that moniker was chosen. For years before it was established, long-term jobless people received another stipend called Hartz IV, and that name had become a stigma and couldn't be used any longer. You didn't want people to know that you were on Hartz IV. There were even pseudo-reality shows on TV prying into recipients' lives and giving the program a really bad name. Now, when a new program was established by Germany's Social Democrats, they called it citizens' money, and they took away some of the hurdles that people found made it harder and maybe more stigmatizing to even get that help, including the fact that you had to regularly prove that you depend on government help, or that you had to accept any jobs that were offered to you and show a certain willingness to work. Now, indeed, many understand today's Bürgergeld as kind of a basic income program, and now that has led to at least 2 major problems. A lot of people happily take this income and don't bother working, and it's also become really expensive for taxpayers.
All right, Lars, thank you so much. We'll see what happens in that line of conversation in the coming days. Now let's head to the commodities market now with Halima Adediran. analyst of financial derivatives company. And today we're discussing soybeans commodity, which, like others, we've seen a surge in the price, $1,525 per bushel. That was last month, July. And guess what? Nigeria is supposed to tap into this because Nigeria is one of the biggest producers, or have the potential to be the biggest producer of soybeans. But as many other things, we have not. Let's have Halima now. Halima, give us, what's the situation with soybeans in Nigeria?
Good afternoon. Thanks for having me.
Yeah, so where is Nigeria in the production of soybeans?
Oh, okay, so Nigeria has a potential to produce about 2 million tons of soybeans, but currently we are not even producing up to half of that. And this is because of the normal corporates that is affecting the farm industry, which is insecurity, the land tenure, which is affecting the availability of land, which is one of the factors of production for farmers, and also tough financing availability for farmers is also one of the things affecting soybeans production and also other commodities in Nigeria. And so for us to really improve, number one is because we have a very good farm space, which enhances the production of different farm produce. So it could help if we have farmers and accessing finance in a way that it could help in their input in fertilizer and also the use of land. It could help in increasing their production and in turn increasing their revenue. And also, we have the issue of pesticides that are not really being used as it's supposed to because of our farm activities that are not as that do not have top notch when it comes to global standardization. So if we can also improve on that, the usage of fertilizer, it will also help in boosting the production of soybeans in Nigeria. And not only that, when we look at the data that was released in Q1 2024 for agri-produce in general, we'll see that the revenue in exports of agri-produce increased by about 223% to over 460 billion naira, which is an improvement. And we'll see that it's sesame seed that shut up that revenue for Nigeria. So this could also happen for soybeans because there's a future for increase in demand because of increased demand in terms of renewable energy, which soybeans can be used for, like biodiesel, and also the increase in industrial production in China. China now has increased its production when it comes to livestock, and it could also improve the demand in that side when it comes to soybeans because it is one of the major components of animal feed in piggery, livestock, and even aquaculture. And not only that, when we look at China again, we'll see that it has a favorable policy when it comes to the import of soybeans compared to other nations of the world. And so that will also improve their demand in the long run. So Nigeria can use all this avenue to increase the production of soybeans and in turn increase the revenue to the country in general.
All right, Halima, we do hope that something can be intentionally done, towards that, so that we will stop talking about potential and actually see the reality. But thank you so much, Halima Dediro, analyst with Financial Derivatives Company.
Thank you for having me.
Now we move to Kenya, where, in spite of all of the protests, the finance minister there says that it plans to bring back some of the tax measures that form part of that controversial finance bill, which lawmakers were forced to abandon after weeks of deadly protests. Well, the first one introduced a contentious housing tax, a double value-added tax on fuel, as well as hike the rate of top salary tax band to 35%. I mean, it's still an ongoing protest in that country. And now having some of those taxes being reintroduced, obviously doesn't paint a good picture. We head to South Africa, where unemployment rate is there unexpectedly up for the second quarter to the highest level since 2022, and it's driven by job losses in the trade and agriculture sectors. The unemployment rate advanced to 33.5% in the 3 months through June, compared with 32.9% in the previous quarter. That's according to data released by Statistics South Africa in the capital, Pretoria. All right, now let's head to the crypto space now and see what's happening right there. I see a green board, or partially green. You also have red there. So even though BTC is still around 58,000, which is about what we had yesterday, but because of the recovery, that's why we see a green. So I guess it's a cautious green is what we'll call it. Ethereum is also back in the green, up 1.54%, 2,634 right there. But we see Cardano and some of all of that are giving us dots of red. So we're not yet comfortably in the green space. Now let's see the headlines now. Hamster combat. Well, I'm sure you see some people just tapping away right there. Hamster combat is in the news now. They said they skipped VC fund offers right there. Binance also in the US faces renewed lawsuit over alleged hex price manipulation. Let's have Olumide Adesina now to help us understand some of this. Hi, Olumide. Good afternoon.
Yeah, good afternoon, Nini. Thanks for having me.
Great. You're in Berlin. How popular is this hamster combat? We know that here in Nigeria, everybody's tapping away. Not everybody, but a lot of people. Some people you don't even think about. I've been caught up with this hamster. How popular is it there in Germany?
It's okay. I think the excitement about crypto is not like we have in Africa, and pretty much because there are so many options, and the Europeans are becoming a bit tighter on crypto transaction. You could see that USDT in dollar terms has been decoupled from many European crypto exchanges. So you can only trade stablecoin backed by USDT, and also they limit the amount of transaction with your KYC being done. But I think what we're seeing in the crypto market today is that it's cautious green. And when I say cautious green, you saw that Bitcoin lost the 6,000 support. The Hamas, Israel, Iran play is still on. Iran is expected to retaliate, so the appetite for risk has moderated considerably. You also look at the fact that a key US Fed official highlighted that the September interest rate cuts might not happen, and that's pretty much because they look like the economy seems to not to be going their way, and pretty much inflation hasn't gotten to their 2% target. So inflation data today and tomorrow will really affirm that, and that's why you see the parabolic activity in the market really heightening up. But I think it's safe to say that it's really going to be a tough quarter with the election in the United States coming to play, and also the fact that we've seen the recession bills becoming louder. So I don't see Bitcoin having that bullish run it had in the second quarter. That's my own opinion.
All right, Olumide, thank you for sharing your opinion. And obviously tomorrow we'll be looking out for those inflation numbers to give us more direction as to the rate cuts and all of that. But thank you so much for your time this afternoon.
Yeah, thank you for having me. Thank you so much.
All right, so that's it on the program. Thank you so much for being a part of Business Incorporated for the second working day this week. We have 3 more working days. You don't want to miss any of that. I'll see you at 10 p.m. for the stock market report. And then if you don't see me then, I'll see you 10 a.m. tomorrow. God's grace. I'm Minnie John.